Bismillahirrahmanirrahim. Dear students, I will discuss today about the topics of capital and revenue transaction. That is the chapter number 4 from your textbook. Okay, dear learners, now you can open your textbook, the chapter number 4. That is the name of capital and revenue transaction. Now, at first, you have to know what is capital and revenue transactions. Do you know what is transaction? I think you have well known the definition of transaction. The events which are related to money or money's worth, which changes the financial position of the business, that called is transaction. But now you have to know how many types of transaction. There are many types of transaction in different way. How is it? According to nature, two types of transaction are available in the accounting recording procedure. Number one, capital transaction, and second one, revenue transaction. I repeat again, according to nature, two types of transaction, capital and revenue transactions. The features of all the transactions of concern are analyzed to ascertain the result of all of its business operations and financial positions of a particular period. Every businessman expects that a business will continue for an indefinite period. Some transactions are such those benefits are achieved for a longer period, and such transactions, those benefits are achieved for a short period. Thinking about the concept, transaction are divided into two types as capital and revenue. I think you have understood. According to nature, two types of transactions are available in the accounting recording procedure. Number one, capital transaction, and second one, revenue transaction. The actual profit and loss and the condition of the financial matter depend largely on dividing the transactions properly. So, the object of accounting is achieved through identifying the two types properly. Now, we can go the next slide. You are seeing in the screen, according to nature of transaction, two types. One, capital transactions, and second one, revenue transactions. Capital transactions give more benefits than revenue transactions over the period. Revenue transactions take place regularly, while capital is rare or irregular. There are other aspects of features to differentiate these two types of transaction from each another. Now we can discuss on capital transaction. Capital transaction means the transactions which are related to long-term benefit or more benefit consumed. This is an irregular transaction, but in this transaction large or big amount of money is related. So you can say the features or characteristics of capital transactions are long term or more benefit consumed. It's an irregular and non-recurring transaction. It's a large amount of money related or big amount of money related. So again, you are seeing in the screen three types of capital transactions are available in your textbook. Number one, capital expenditures. Second one, capital receipts. Third one, capital income. What is capital expenditure? All expenditures of non-recurring nature, the benefits of which are enjoyed by the business for a long time or long-term benefit, is called capital expenditure. You can say the fixed assets and investment related items are related to capital expenditures, such as land purchased, equipment, installation cost of fixed asset, and investment, and other fixed asset. It is to be remembered here that the expenses that increase the life or volume of asset will also be treated as capitalized expenses or capital expenditure. It can be said that the expenses which will ensure further utility over the period will belong to capital expenditure. Now we can go to second one, capital receipt. The receipts which are irregular, amount of which are bigger and the benefit of which are more than a year are known as capital receipt. In business capital, loan taken from bank or other institution, selling a fixed asset are examples of capital revenue. You are seeing in the screen capital receipt, only three items are related: capital or additional capital, loan taken or mortgage loan taken or debenture issued. Another one, sold fixed asset. Now we can go to the third one, capital income. Capital income does not occur regularly and its examples is not many. Capital income is a part of capital receipt. After using fixed asset for several years, it may generate some income by selling it. For example, old furniture sold for Taka 70,000, but the current value of asset is fixed Taka 68,000. Here the capital income 70,000 minus 68,000 is equal to Taka 2,000. It is to be noted that capital receipt is Taka 68,000, but capital expenditure is Taka 70,000. And here capital income is taka 2000. Okay, now you can go to the next slide. Discussion on revenue transactions. In this screen, the revenue transaction. What is revenue transactions? The features or characteristics of revenue transactions are its short-term benefit consumed, it's a regular item or recurring item, it's related to a small amount of money. Different types of revenue transactions. Number 1, revenue receipt or revenue income, revenue payments or revenue expenditure. Third one, deferred revenue expenditure. What is revenue receipt or income? All recurring receipt by way of usual incomes or profit of business, which are used for meeting day-to-day expenses of the business, are called revenue receipt. For example, sold goods, commission received, sublet rent, apprenticeship premium, interest received, discount received. Second one, revenue payments or revenue expenditure. The recurring expenses of an organization are to run the business, and the utility of which is expired within short time is called revenue expenses. For example, goods purchased, wages paid to the worker, salary paid to the manager, interest paid, rent paid, commission paid, discount allowed, depreciation, bad debt, etc. Now you can go to the third one, deferred revenue expenditure. Expenditure of revenue nature, the benefit of which extends beyond the accounting period in which it is occurred, is generally written up over a number of years during which it is expected to benefit the business. The unwritten portion of such an expenditure, which is carried forward to the subsequent years, is called deferred revenue expenditure. For example, research cost of new product of any business, business transfer expenses, preliminary expenses, huge amount of money paid for advertisement. These are deferred revenue expenditure. Okay, now you can go to the next slide for identifying capital and revenue transactions. How to identify it? For your betterment, for learning, for practicing, I have given lot of examples related to the capital and revenue transactions. Okay, in the table, serial 1 to 42, transactions 1 to 42, and answer these types according to nature. Number 1, capital brought. What type of transactions according to nature? This answer is capital received. For why? Reason, it will be used in business for for several years and have to return to owner. And it's an very irregular item and non-recurring item. Second one, additional capital. Question, what type of transaction? Answer is same, capital received as capital brought. It will be used in business for several years and have to return to owner. Third one, debenture issued. This also one kind of capital received. Fourth one, loan taken or bank loan or mortgage loan. What type of transaction? It is also a capital receipt because it will be used in business for several years and have to return to creditors. Land sold, that is assets sold, or investment sold, that is assets sold. It's a very irregular item or irregular receipt, that is non-recurring receipt, but big amount of money received for this one, so it is a capital receipt. Okay, number 6, land cost or land purchased or machinery purchased. What kind of item according to nature? The answer is capital expenditure. Reason, it's an irregular expenditure and long-term benefits added with the cost of land or machinery or any kind of fixed asset. So this amount is capital expenditure. Land registration cost, this is also one kind of capital expenditure. Reason same, is a non-recurring item or irregular expenditure, so this amount is capital expenditure. And installation cost of machinery, when any asset purchased, that is fixed asset purchased, then all kind of expenditure to be included in the fixed asset. So when any fixed asset purchased, then it is related to capital expenditure, and its installation cost, its carriage cost, its import duty or any other cost to be included in the respective asset. So installation cost of machinery is capital expenditure. Next one, patent, trademark, copyright. 3 items are related to invisible asset, but these are fixed asset. It's an irregular expenditure, long-term benefited by business from these items. So these items are capital expenditure. Furniture bought, same as machinery purchase, land purchase. So furniture bought is one kind of capital expenditure. Land development cost, land related item, land purchased, land registration cost, land development cost are followed same rules. It is also one kind of capital expenditure. Reason is same. Next one, leasehold property. It's a capital expenditure. Huge amount of money paid for this one. It's an irregular item and non-recurring expenditure. Next one, goodwill earned. Goodwill, one kind of fixed asset. We know that from the above information, when any asset earned or acquisition or purchased, then it is related to capital expenditure. Next one, motor car, delivery van, or any other fixed asset. What type of transaction? Answer, capital expenditure. I think you have understood this one because these items are very easily to take your learning procedure. Okay, we can go to the next page. 15. Goods sold. It's a regular item and recurring goods. And several times occurred in any business. Goods sold. One of the main important revenue income, goods sold. So goods sold, what type of transaction? Revenue income or revenue received. Second one, commission received. Commission is one kind of regular item for receiving amount. This one is also revenue income. Discount received. Reason, it's a regular item and recurring small amount of money rebate from any other creditors. So this amount is revenue income. Sublet rent or rent received from subtenant, that is the revenue income. It's a regular item or regular income. Apprenticeship premium, it's related to recurring or regular item. Small amount of money related to this item. So this amount is revenue income. Interest on investment. Investment purchased or acquired is one kind of capital expenditure, but interest from investment or any other source, then it is related to revenue income. Interest on drawings, that is the amount of revenue income. Dividend received, dividend get from share or investment. Share or investment, one kind of capital expenditure, but when amount received from other source or investment, then it is treated as revenue income. Okay, now you can go to the next item, goods purchased. One of the main item of expenditure of any business. Main expense, that is the regular expenses of business. It's a recurring item. Huge amount of transactions. Huge transactions are related to this transaction. So goods purchase is revenue expenditure. Wages paid, salary paid. These items are also revenue expenditure. It's a regular item. It's related to a small amount of money and it's a recurring expenditure. Discount paid or allowed, commission paid, rent paid. These items are also a revenue expenditure because these items are related to a small amount of money and these are regular item and recurring expenditure item. Okay, you can go in the last phase for list of capital and revenue transaction and for identifying what type of expenditure or what type of transactions according to nature. 29. Interest on loan or debenture. Loan or debenture is one kind of long-term liability or long-term receipt. Loan or debenture related to capital received, but but its interest always is regular item paying from business to the creditors. So interest on loan or debenture is revenue expenditure. It's a recurring item. Utility bill, that is gas, light, electricity related to utility bill. These items are paid per month. So it's a regular item and recurring expenditure. Small amount of money related to this expenditure. So it's one kind of revenue expenditure. Okay, next one, number 31, advertisement, insurance premium, repair expenses. These items are also revenue expenditure because it's a very regular item and short-term benefit from these item and a small amount of money related to these transactions. Now 34, depreciation. What do you mean by depreciation? Dear students, listen to me what I say. Depreciation is the amount which is deducted from the fixed asset, or depreciation is the written down value of any fixed asset amount which is deducted from the tangible fixed asset. Amortization, it's also one kind of expenditure, but do you know what is amortization? It's another name written up. Amortization means the written down value of intangible fixed asset. So you can say that depreciation is the written down value of tangible fixed asset. Amortization is the written down value of intangible fixed asset. It's one kind of revenue expenditure. Bad debt or uncollectible debt. What is bad debt? The irrecoverable amounts from customer, which amount is not collected from the customer or debtors or receivable, that is called bad debt. It's one kind of revenue expenditure in business. Sundry loss, any abnormal loss or accidental loss or stolen, lost, all are related to revenue expenditure because it's a small amount of money related to this transaction. Okay, now we can go 37 number, research cost of new product. Dear students, we have already said that the amount related to deferred revenue expenditures, research cost, business transfer cost, big amount of advertisement, preliminary cost, large amount of repair expenses to fixed asset. These items are related to only deferred revenue expenditure in your textbook. Last one for today, profit on sale of machinery or profit on sale of land. When any asset sold and got it profit, then it is treated as capital income. Okay, dear students, I think you have understood of all items of capital and revenue transaction. A business person needs to assess his economic and financial condition after a certain period, generally in a year. For this, at least 3 statements needed to be prepared. Statement of comprehensive income, which is the mixture of trading and profit and loss account or income statement. Second one, statement of owner's equity. And third one, statement of financial position, which is related to the balance sheet. From the comprehensive income, we come to know the amount of profit or loss. From the owner's equity statement, the amount of owner's interest to the business, and from the statement of financial position, we will be able to know about the assets and liability of business. So, if you are identified the capital and revenue transactions is correctly, then I think you have to identify the correct way, which are income or expenses, which are asset or liabilities. I repeat again from the first one. According to nature, how many types of transaction? Two types of transactions in according to nature. Number one, capital transactions. Second one, revenue transactions. Again, three types of capital transactions. Number one, capital receipt. Second one, capital income. Third one, capital expenditure. Again, three types of revenue transactions: revenue receipt or revenue incomes, revenue expenditure or revenue payments. Third one, deferred revenue expenditure. I have given a lot of examples for you, only for your betterment. So you have to watch and listen very carefully and practice properly in your home. I think all you are fine. Stay home. Be safe by the grace of Almighty Allah. Thanks for being today. Allah Hafiz.